Hello, this is Tyler here from Socrates Trading. It's January 27th, and I'm going to discuss with you some great strategies for beginner day traders. Many day traders come to me with interest and also with advice, and these are just great techniques that will help those beginners out there that want to get an edge as a day trader that are just starting out. Okay, number one is find favorable entry points. Look at scenarios where supply and demand are drastically out of balance and use these as entry points. The financial markets, more like anything else in life, there's this supply and demand aspect, and price is often, there's arbitrage that you're looking for to get in right before the masses and get out before the price gets too high. So this is probably the most important thing, and it's essential. It just like any merchant that's buying and selling goods, entry price is key as you're buying and selling something within a day. The second one is set day trade price targets. And all traders, no matter what the expertise levels, should have trading price targets before entering the market. If you're buying a long-term position, traders should decide in advance how much profit is acceptable, as well as a stop loss level if this trade turns south. And you have to stick to these decisions. The limits on these will help keep traders in the game and avoid large losses, and also take their gains when they occur. Now, the next thing is insisting on a good risk-reward ratio. Risk-reward is so important with day trading and swing trading. One of the most important lessons in stock market is to understand what's a proper ratio. Beginner traders should stick to a strict rule of only trading $1 to potentially make $3, or a risk-reward ratio of 1 to 3. And having proper stop loss utilization will allow traders to avoid big losses and also have solid returns. Now, after gaining some experience, this risk-reward ratio can be as high as 1 to 5 or even higher with good experience. The next thing is be patient. Day trading requires exponential level of patience, and it's so important that you get used to the patience and you understand when and why you should exit, and likewise when you should enter. It's very difficult even for more advanced traders to abide by this, but if you can, you'll stay in the game much longer. The next thing is be disciplined. Discipline is integral to being long-term successful and consistent as a day trader. Beginners need a game plan to stick to, and greed will make a trader lose and not successful in the long term. So never expect to get rich on a single trade. Follow a system and stick to this again and again. The next thing is to execute trades confidently. Don't be afraid to push the order button and execute a trade. Novice day traders often experience paralysis by analysis because they get too wrapped up in watching trading charts in other areas like candles and all these columns, rather than just making a trade when they've decided it's a solid move and not risking too much. This is what disciplined day traders understand, is that they stick to their plan and they execute when they need to, just like they sell out when they need to. The next thing is budget wisely. Day trading with a smaller sum of money is much more difficult than larger sums, and successful traders need to understand how to budget in a way so that they can last for the long term. The next thing is to balance capital invested per trade. And what this means is that position size refers to how much capital is allotted to a transaction in the stock market. A simple example would be if a trader wanted to invest $100, they could buy 10 units of a stock that was priced at $10, and this would be 10 units times 10, which is $100. It's important never to risk too much capital on one trade. Position size should be set as a percentage of the total trading day budget, which could be anywhere from 2 to 10%. For beginner traders, or on the lower side of 2 to 5% at most, because the risk of loss is potentially greater as the size increases. And the next thing is to just learn from experience, do trade analysis, and understand where mistakes were made, and likewise where you made solid moves, so that you can continue using this to further your journey as a day trader. I hope everyone got something out of this, and please give me your feedback. Thank you.